I think we can start now. Welcome to Hong Kong U FinTech Day, panel 2. Actually, this is a specialized organized section for CBDC. I'm SMU from the Department of Computer Science. I'm the associate head of the department, as well as the associate executive director of the Hong Kong U-SCF FinTech Academy. Now, let me first introduce our department head, Professor T.W. Lam. He is also the executive director of the Hong Kong U-SCF FinTech Academy. Let me invite him to say a few words before we start the panel. Professor Lam, please.
Good afternoon, everybody. I hope everybody can hear me. Okay, good. On behalf of the...
You muted?
I didn't mute it. Can you hear me?
Yes, we can.
Yeah, thank you. On behalf of the HKU Standard Charter Foundation FinTech Academy and the Department of Computer Science of HKU, I would like to welcome all of you to the 2022 Hong Kong U FinTech Day. This afternoon, we have a very special session to talk about the technologies behind CBDC, central bank digital currency. Well, I'm sure many of you have heard about that. Many places, countries, cities are considering to issue their own CBDC, well, such as China for ECNY, Hong Kong for e-Hong Kong dollar. Nevertheless, there's no agreed design and implementation for CBDC up to this moment. Indeed, it is not easy to have perfect solution for some of the requirements for CBDC. For example, for ECNY, how to achieve anonymous for payment of small amount while making it traceable for large amount is something that turns out to be very challenging. In this afternoon, or in the coming 1 hour, we have 5 FinTech experts from the Department of Computer Science to talk about different technological issues behind CBDC, as well as some of the proposed solutions for CBDC. To start with, exactly is let me see, the first guy, this one, right above me. To start with, Dr. Alan O will talk about the possible architectures for CBDC and their corresponding issues on security and privacy. And then the next one should be this one. Get it. Dr. Chen Sung Chen, he will talk about the gap between design and implementation of digital currency platform. If it is not being done properly, this can easily lead to inconsistency and possible attacks. And then next, Dr. John Yun. John Yun will share some very exciting proposed solution on how to tackle problems in security and privacy. And Chi Liu, the last one, okay, the last one, will demonstrate how to use AI technology to trace anonymous yet suspicious transaction of digital currency. And then finally, Professor Yu will come out again. Well, remember, we call that he's an associate director of the HKU-SCF FinTech Academy. He will give a concluding remark. I hope all of you will enjoy the coming 1 hour of mini talks. Thank you.
Okay, thank you, Professor Lam. Without further delay, let me just introduce the first speaker, Dr. Alan Lau. I think he's here. Let me see. Yeah, he's waving his hands. Okay, this handsome guy. Okay, let me pass the control to Dr. Alan, how he will talk about the architecture for CBDC, especially on the issues of security and privacy. Let's welcome Dr. Alan now. So I let you share the screen now. Thank you.
Thank you, Professor Yu, and thanks, Professor Lam, for the introduction. Let me share my screen now. Let me see. Is my PowerPoint being displayed properly? Oh,
Yes.
Yes, we can see it.
okay, thanks. All right. So I'm the first guy. That's good. So I can talk about the technical architecture for CBDC, and also some of the security and privacy issues. It's really an honor to join this HKU FinTech Day in this special session. So central bank digital currency, CBDC, is, well, as its name suggests, is digital money issued by the central bank. It has been studied by, I think, more than 100 central banks around the world. And some of them are already trying to experiment rolling out the experiment. And some are doing some POC or prototype study. And it can be divided into two types, actually. One is the so-called wholesale CBDC, and the other is retail CBDC. Wholesale CBDC or wCBDC is used for interbank settlement. And in Hong Kong, the investigation of CBDC, of wCBDC by the HKMA actually started like a few years ago in 2017 in Project Lion Rock. And later it was expanded to study not just the interbank settlement within Hong Kong, but also its potential on cross-border payment. So it was joined up with Bank of Thailand and evolved to Project Evanon Lion Rock. And last year, it was further evolved to Project Ambidge, which also involved the Central Bank of UAE and also the Digital Currency Institute of the People's Bank of China. So this is the case for wCBDC. And in terms of retail CBDC, is intended to be used by the general public. Last year, HKMA rolled out the feasibility study on retail CBDC, which is called the project e-HKD. And there are also two other projects by HKMA, which is also relevant, Project Arum, which is a POC study on the different distribution model of CBDC. This is in cooperation with BIS Innovation Hub. And also there's another one, which is Project Sila, which is a partnership with Bank of Israel and also the BIS Innovation Hub, which focus on the cyber security of retail CBDC. Now, what are the potential benefits? Why are so many banks around the world researching in CBDC? These are the 5 possible benefits, like improving the usability, positioning for challenges from the new form of money, such as stablecoin, supporting innovation. I think this one, meeting future payment needs. I think this one is also a very, very hot topic. And can the potential rollout of CBDC be beneficial to not just payment, but also foster innovation in things like DeFi? And other possible benefits include efficiency, and also as a new means to enforce the monetary policies. So there are many, many possible benefits, and therefore so many central banks around the world are studying this. And today I'm going to discuss one possible architecture, which this is just one possible architecture. As Professor Lam said, there are many, many possible architectures, which is a 2-tiered architecture in which the banks will hold a ledger or distributed ledger technology like blockchain to support the wholesale CBDC. And this is for interbank settlement transactions. And it can also be connected to some other systems to foster this foreign exchange transaction or foreign currency payment. And then or can be used to do other settlement or for delivery versus payment, this kind of stuff. And the other layer will be for the retail CBDC. So the banks will be facing the customer, distribute the e-HKD to the retail customers. And in this model, it's kind of expected that maybe different banks will roll out their own wallet system and be responsible for things like authentication of the customers and all these operational tasks. And HKMA or the central bank will be playing a role for monitoring and also provide the core infrastructure. Then if we follow this two-tier architecture, there are still things to design. So how should we distribute the token or so-called manage the account? In one model is the hybrid model. The banks will be handling the retail payment transactions. So the retail balance will be first modified in the bank's ledger, but then it will be synchronized to the wholesale layer. Or in the intermediate model, the central bank does not record any retail balance. It only record the overall balance of the banks. So these are the possibilities. And of course, there are always one possibility, which is the direct CBDC model, in which each user directly has an account at the central bank, which I think is not likely. And another model is, okay, the banks will be responsible for issuing the e-money, and which will be backed up by CBDC. So there are possible architectures. And we envision maybe this two-tier architecture will be adopted in Hong Kong eventually if CBDC is to be rolled out. And daily activities, how are we going to use the e-HKD if it is issued? It can be used for private transfer between users. I may have hold a wallet from one bank, you have another, but still I can transfer the money to you, and then I can make direct payment to merchant, and maybe it will be interoperable with other payment service provider. So I can use the e-HKD to make a payment via other payment service provider existing networks. That's also a possibility. Now, there are a number of challenges if we are to deploy this CBDC. The first one is privacy challenge, and we need to make a decision. What kind of information should be available to which party? If we follow this two-tier architecture, the banks will be processing our transaction data. Would they be allowed to hold everything of us or just part of them? And also, a related question is, okay, after we decide what should be available, then how do we enforce this rules? We can do it by using a regulation, but the consensus seems to be, okay, we should enforce it by design, maybe by technology, to make sure the parties are not supposed to ask information that they are not authorized to. So this is the privacy challenge. And then we have a cybersecurity challenge. And as HKMA has repeatedly said, it's really, really important, a critical consideration. And security should have a higher priority over efficiency. And we should adopt a zero trust approach. That means we don't trust, we verify. And one other challenge is how to rigorously define the security of CBDC. And a related one is smart contract, or so-called programmable money. Now, if we want to foster innovation, definitely smart contract will be a welcomed addition. That means we can embed complex payment, conditional payment to the money, to the e-HKD. But now we need to ask ourselves, who can deploy the smart contract, who can approve the deployment, and who can make sure that they are secure, they are correct, they are not maliciously deployed to steal money. And in case there are bugs, how do we rectify them? So my last slide is, okay, so what is expected from this e-HKD? Security, the most important thing. It is expected that a multi-layer defense strategy would be adopted. Then privacy, we advocate a privacy by design approach. So privacy enhancing technology should be embedded in the design to make sure the entities would not be able to breach the privacy. And availability, well, the use of distributed ledger technology should help a little bit, But it is expected that the system should be always on and resilient and robust, so redundancy architecture. And also the other thing that is kind of hard to achieve is support offline payment, especially if we want to maintain the same level of security. In the case of offline to offline payment, it's kind of challenging. The last one is to combine with the AML or CFT and sanction. And this thing is really, really challenging if we consider also the privacy enhancing technology to be deployed. How do we strike a balance between them is a difficult question. And also if we try to connect the CBDC with the external system, then how do we trace the source of the money would be another challenge. So I guess I should stop here, and thank you.
Okay, thank you, Dr. Alan Au. Very exciting introduction for the CBDC architecture. Now, let me invite the second speaker, Dr. Chen Song Chen. Now, in fact, in most of the document we look at, I think a lot of people overlook this issue. There should be a gap between the design and the implementation of the systems. Now, so let me just invite Dr. Chen to talk about, in CBDC, in particular, he will use one of the blockchain platform to illustrate there may be a gap between the specification and the implementation of the systems. Chen Song, please.
Okay, can you see my slide?
Yes.
Okay, great. Yes, thank you for the introduction. Okay, today I will talk something about the gap between the specification and the implementation blockchain platforms. And I will also introduce the problem that the gap causes us, and also our proposed approach to narrow the gap. Okay, so first, let's recall how is software implemented, right? The software is a piece of program that has the features needed by some particular end users. And the program is developed by developers by writing some code. And the users will tell the developers what they want, and the developers are responsible for writing the code to implement the software. And usually there's a communication gap between the users and the developers, because we know that most developers are not good at talking to normal people, at least not that good at talking to the computers, right? So for example, when the users tell the developers that I want to trade cryptocurrencies and I want to be rich, definitely the developers have no idea about how to do that. So instead of talking to the developers directly, the users will first talk to some experts. So they will tell the expert what they want, and then the expert will make their requirements more specific, and also propose some technical designs, and also maybe also describe some properties that the system should have. For example, this system should be robust enough, should always be available on 24/7. So they will wrap those in the document. We call that specification. And with the specification, the developers will follow the specification to write the code and implement the software. Now seems this kind of communication is more clear and efficient, right? But the problem is that does the software behavior at what exactly the specification tells? The answer is no, because for almost all the software, there's a gap between the specification and the implementation. And when that happens, when the software does not behave as expected, we say that there's a bug in the software. And this gap can be caused by multiple reasons. For example, the specification might not be clear enough, so it causes some confusions. And also the developers, they may not understand the specification correctly, so they will write some code based on the misunderstanding. And also developers, some developers do not even know what they're coding, right? Believe me, there are a large number of developers they do not fully understand the code that they write. So this case is more serious in blockchain platform because of the multiple implementations. Take the Ethereum as example. So for the Ethereum, there's a specification proposed by the community. So it tells what should the Ethereum blockchain perform. And based on the Ethereum specifications, different communities or companies, they develop different implementations. We call those Ethereum clients. And the users, they will run those different clients as a node in the network. So they can run the clients, join the network to interact with the blockchain. For example, they can use the client to broadcast new blocks, to post transactions, or to verify the state. So because now we have one specification and we have multiple implementations, which are developed by different programs, different developers. So those different implementations, they may share inconsistencies because they're developed by different organizations, and different developers have different understandings of the specifications, and also the developers may have their own coding preference, like coding styles, or they prefer to use the algorithms that they're familiar with. And also the implementations are written with different programming languages. Because of these reasons, inconsistencies happen in those different implementations on the Ethereum platform. And when that happens, it can cause very serious attack, because for the blockchain platform, when the users are running those clients, they're trying to reach a consensus state that all the nodes can agree on, right? But if there's some inconsistency among the nodes because they're running different clients, then when the inconsistency happens, they cannot reach the consensus state that they all agree on. So for example, in 2020, because two of the most popular Ethereum clients that do not implement the specification consistently, so the attackers use this inconsistency to launch the attack, which made the Ethereum community to do a hard fork, and also the attackers stole around like $10 million US. So we proposed our approach to narrow the gap between the specifications and the implementations. So here's how we do that. So first, we will extract models from both the specifications and all the implementations, and then we will analyze the models. And then in the end, we will compare the semantics of the models to detect inconsistencies. And there's some details about how we do that. So first, about the model extraction. For the implementations, because they're code, right, we can use some automatic way to extract the model, like static problem analysis and dynamic testing. But for the specifications, they're written with human language. It's nearly possible to automate that. So we will use NLP technique to help the human to extract the models. And with those models, we will use some programming techniques to extract the high-level semantics of those models, such as using abstract interpretation. And in the end, we will compare all those model semantics to detect inconsistency, to identify anything inconsistent between all the implementations and the specification. That's basically what we will do. Yeah, thanks.
Okay, thank you, Dr. Chin. Actually, Dr. Chin illustrated one of the issues that we want to point out. for CBDC implementation, because when we design, usually there's a gap between the design and the implementation, and our possible solution to solve it. Now, next, may I invite Dr. John Yun? Actually, Dr. Alan Au point out a few privacy and security issues. Due to the time limit, we are not able to tell you all the possible solutions that we want to, our team has been working on. But let me just let Dr. Yun to give you some snapshots on what we have been doing, so that you can see how we can tackle some of the very difficult problems in implementing a CBDC. Dr. Yun, please.
Thank you, Professor Yu, for the introduction. So today I'd like to talk about the possible solutions to some of the security and privacy issue mentioned by Dr. Au. And because the time is limited, today I will talk about, just focus on two specific issues. One is related to the security and one is related to the privacy issue. So the security issue we would like to talk about is on the security of digital wallets. So because the end user side is usually considered to be one of the weakest link in a lot of systems that we use nowadays. So in the case of CBDCs, so the end users would use wallet to manage their keys and spend their monies. So we have seen currently in cryptocurrencies, there are lots of security issues related to the lost or stolen keys. So compared to the traditional e-banking system, if you lost your password, then you can ask the bank to reset your password. Or if your credit card is stolen, you can call your bank to stop the further transactions. But in the current crypto world, the problem is that there is no trusted party to manage your keys in those public blockchain. And if you lost your password of your e-wallets, then you may lose millions of dollars, like the guy shown here, who lost hundreds of millions of US dollars by losing his password of his Bitcoin wallet. And it is not something that is very uncommon, because according to some analytics, like around 20% of the Bitcoins are locked because of the lost password. So it is quite common. And the problem is not only on the like a single user side. A lot of large companies, corporate, and maybe even exchange, crypto exchange, they also face similar issues. Like one of these cases happens in Hong Kong is that US $72 million was stolen from the exchange platform Bitfinex in Hong Kong in 2016. And it was reported that it is possibly caused by a stolen private key of the exchange. So we have seen that this is one of the very serious issue for both end users and also corporates who use the CBDCs. So what are the root cause of that? So the root cause is the problem of the key management issues, because the cryptographic keys to access your money is different from a password-based system. It is not human memorizable because it is a very long random numbers or bit strings. So it is so long that it is not easy for human to memorize, nor easy to write down on a piece of paper by hand or type it back by your keyboard, because it is just too long. So it is quite problematic to memorize those keys or typing those keys. So how we manage it? So there are, of course, there are some common key management methods currently in the market for cryptocurrencies. Like we use some key custodian companies to help us to store our keys. Or you download a piece of software yourself and then you manage your keys in your own computer, like the non-custodian wallets, like MetaMask. You can install it in your computer and then you manage your own keys in your own computer. But of course, the problem is that if your computer is lost or there is some problems, you cannot open your computer again, then all your money is gone. Or you may also try to use a custodian wallets, like using a third-party exchange like Coinbase and some other companies. So they can help you to manage your keys. But of course, the risk is that they control your keys and hence they can completely access your asset. So there are different possible choices when we want to design the end user digital wallets for CBDC. So we need to think about what are the possible solutions and what is the best for the user. And apart from that, we can also divide the wallet into two different kinds. Like one is the hot wallet, which is always connected to the internet. It is convenient, but it is also more vulnerable to online attacks. On the other hand, there are cold wallet, like you store your keys in a USB drive, which is not connected to internet. You only use it, connect it to your computer when you use it. So it is more secure, but less convenient. Perhaps one of the better solution currently is that you store the large amount of your money, the majority part of your asset, to a cold wallet, while you just transfer a small amount of money to your hot wallet for your daily usage. So that is one possible solution. In terms of key recovery of your wallet, one common technique that was in use nowadays is to use the seed phrase, a easy to remember sequence of 12 words chosen from a large set, and then you can recover your keys, your final keys. So this is one technique that we know nowadays. It is also possible to be used in our CBDC wallets. And apart from that, the blockchain itself also allow some more complex authentication methods. For example, it allows something we call the multi-sig wallet, such that you can use any M out of N keys to authorize a transaction. For example, if we consider a wallet that allows 2 out of 2, that means you need 2 keys out of a total of 2 keys to authorize a transaction. So it is quite similar to what we call as the two-factor authentication in our current e-banking system nowadays. Or we can use something like the 2 out of 3 wallets to assign a third party to help us to manage the keys. In case we lost one share of our key, then we can ask a third party to help us to recover it. So this is something that can be done to manage our keys in our digital wallets. And in our group, we are doing some research in this direction on key management. For example, we study the threshold signature for ECDSH, which can help us to split a key of a digital wallet into shares. For example, I can split it into 3 shares, and some of them are stored in a USB drive, some of them in my computer, and some of them in a third party, such that you can use any 2 out of these 3 shares to recover the entire key for a transactions. So this is something that we have done. And we have also done some research on multi-signature. For example, we need multiple keys from different wallets to authorize a single transaction. And our research is on how to do it in a more effective and a lower cost way to do so. So this is some of our research in terms of the key management in wallets. And the second part we would like to talk about is on the privacy issue and its trade-off with the existing KYC or AML regulations. According to the CBDC report from the HKMA, they mentioned that there is a need to ensure that the e-HKD upholds the user privacy while ensuring the integrity of the system. And we need full anonymity. If it is not a complete solution to that, because we need to do some kind of AML or CFT requirements. So they also mentioned that they are considering a tiered wallet approach, such that we offer a greater degree of anonymity for wallet with a lower maximum holding and transaction limit, just like how we use a cash every day, while making high-value payment traceable. So this is something that they propose in the report. And we also have some research in this area in both directions. So in terms of high-value payments, we have some solutions on auditable blockchain, such that user can sign on behalf of a group. So they obtain some keys or credentials from a group manager, and then he signed on behalf of a group to protect their privacy. But at the same time, this privacy or anonymity can be revoked by some authority, some opener. in case something the legal enforcement need to open it, then they can do so. So we have some research in this direction for auditable blockchain. While on the other hand, for lower value payments, we also have some research on a solution called ring signatures, which provide full and unlimited. Like in this case, if some real user, he wants to make a purchase, he randomly picks some other decoy, some other users, and then form a ring signature such that the verifier has no way to find out who is the actual spender for that transaction. So this solution provides a full and unlimited. So we believe that with a combination of these two solutions, perhaps it also serves the two-tier approach as proposed in the CBDC report. So this is the sharing for today for the security and privacy solutions. And thank you.
Thank you, Dr. Yun. Actually, I think Dr. Yun gave us a snapshot of part of the solutions provided by our research team. Actually, there are more solutions that we are having researched and proposed to solve the e-Hong Kong D CBDC problems. But due to the time limits, let me proceed to the last talk. Will be given by Dr. Liu Qi. As mentioned by Professor Lam, this is a very important problem that we at the same time, we want to maintain the anonymity of the transactions, but then how we can trace the illegal transactions. Let's welcome Dr. Liu Qi to talk about that. Thank you. Liu Qi, you can start now. You mute yourself. Can you check it? Can you unmute? Sorry, yeah.
Yeah, sorry, I just muted myself, sorry. Can you hear me well now?
Yes, please go ahead.
Yeah, sure. Sorry, yeah. Thanks for the introduction, Prof. Yu. Yeah, good afternoon, everyone. My name is Liu Qi. I'm an assistant professor at the Computer Science Department. Today, I want to share our ongoing project about fin detector. We leverage artificial intelligence to trace financial transactions. This is a joint work with Yu Wei and Professor Yu. A financial system is a complex system with many components and sophisticated relations. To represent the relational data in the financial domain, graphs are commonly constructed. Below, I show two examples. The first one is a transaction graph of Bitcoin. We can see that anonymous accounts issue transactions to transfer Bitcoins. Also, we can see that the network is highly clustered. In the second example, it is a financial transaction network connecting different financial entities. We know that some transactions are fraud and money laundering transactions. So financial institutions are responsible to early detect these anomalous transactions. However, the complex nature of financial systems may result in complicated graph structures, which imposes challenges to financial transaction surveillance and analysis. We know that AI has revolutionized data science. AI has proven to be effective in processing Euclidean data such as text, images, and videos. For example, GPT-3, which is a few-shot learner that can handle thousands of natural language processing tasks. The second example is Flamingo, which is a model that can understand both visual and textual information in order to perform conversation with human users. The last one is Stable Diffusion, which creates a lot of buzz in the community recently. It is a text-to-image generation model. Back in 2016, Jack Ma, who was the CEO of Alibaba and the richest man of China, had a debate with Elon Musk. in the World AI Conference. So Jack Ma said AI cannot beat human because AI has no creativity. But nowadays we see that AI has its own creativity in drawing, making music, or writing songs, etc. Also, in the meantime, AI has also been applied in non-Euclidean data, for example, graphs. We see some successful application of AI in analyzing chemical molecules, social networks, world taxonomy, etc. Given the success of AI in processing non-Euclidean data, this motivates us to apply AI for analyzing the financial transactions. In this work, we investigate using state-of-the-art AI techniques for financial transaction analysis. We have several goals. In the first goal, we want to build a fair and comprehensive benchmark to monitor the research progress of this emerging field. Also, we want to analyze the advantages and disadvantages of different methods. This will open the possibility of design new algorithms tailored specifically for financial applications. Finally, we want to open source an easy-to-use library for researchers and industry practitioners to continue work on this problem. So we believe our project has many applications, for example, the anti-money laundering, fraud detection, bank loan, etc., whether the loan should be approved or not, e-commerce and stock prediction. In this talk, we take anti-money laundering and fraud detection for illustration. I'll first introduce a little bit about money laundering. Money laundering is a process of concealing the origin of money by converting it into a legitimate source. Money laundering is a profound global problem and is often used by organized crime, such as drug dealing and human trafficking, to disguise the source of their money. Interestingly, it has been considered the world's third largest industry. The IMF estimates that around 2 to 5% of global GDP is being laundered annually. Financial institutions usually take 5 key steps to prevent money laundering. The first step, they install a compliance team with the financial institution, including formal anti-money laundering training for their employees. Then they develop a know your customer profile maintenance. In the third step, they develop the transaction monitoring system to oversee account activities. In the fourth step, they can manually review flagged accounts and transactions. Finally, they submit suspicious activity reports to the Financial Intelligence Unit. And then finally, the Asset Recovery Bureau can recover the assets. We can see that the process is highly dependent on manual labors and it's a very time-consuming process. So also, if the financial institutions does not do this properly, anti-money laundering can cause great reputation damage for financial institutions caused by failing to detect the money laundering activities. So AI has a great important role to improve the efficiency and the performance of the anti-money laundering system. The second application is fraud detection. Things people used to buy in stores are now purchased online, whether it's furniture, groceries, clothing, etc. So detecting fraud in a dynamic global corporate environment with overwhelming quantities of traffic and data to monitor is an important task to protect users. According to a report from McAfee, they mentioned that cybercrime presently damaged the global economy around 600 billion, or 0.8% of global GDP. So AI is playing an important role in fraud detection nowadays. In this work, we consider both traditional methods of AI and deep learning methods for financial applications. For traditional methods, we consider 3 types of models, including the linear model, the Bayes method, and tree-based method. So for each type of model, we consider different variants of the models. For the deep learning methods, we use graph neural networks to analyze the financial transaction graphs. Graph neural networks support efficient and effective relational learning and feature reasoning on graphs. we consider different variants of the graph neural networks. For example, the graph convolutional network, graph attention networks, etc. In order to apply graph neural networks to transaction data, it's quite straightforward. We perform the graph construction and feature processing, and then we feed both the graph and the feature into the graph neural network. And finally, we use some prediction heads to predict the properties of the transactions of our accounts. For datasets, we use for public datasets for anti-money laundering and fraud detection. For anti-money laundering, the task is to detect money laundering accounts and all transactions. For fraud detection, the task is to detect the fraud transactions. We use the PaySim, Bacon OTC, and Bacon Alpha for the fraud detection, and we use a real-world Bacon dataset, Elliptic, for the anti-money laundering. We show some preliminary results on PaySim. From the table on the right-hand side, we show different methods, and we calculate several metrics, including precision, recall, FN score, etc. From the table, we found that tree-based methods perform strongly on this dataset. For example, the SG Boost achieves an FN score of 0.848 and an AUC of 0.87. This shows that artificial intelligence methods are an effective tool for fraud detection. Also, we noticed that some other methods like multi-layer perception, linear models, and Bayes models underperform tree-based methods on this dataset. Then we show some anti-money laundering results. From the table on the right-hand side, similarly, the tree-based methods outperform others on elliptic, followed by the multi-layer perception. SG Boost achieves an FN score of 0.95 on this dataset. So this shows that artificial intelligence algorithms are a useful tool for anti-money laundering. We also noticed that graph neural networks perform the best with only 2 layers. So this means that incorporating the long-range dependency does not help for this dataset. Finally, we show the results on the Bacon dataset. We found that the graph convolutional network performs the best on this Bacon dataset. So we found that the average node degree of this dataset is much larger than the previous 2 datasets, including elliptic and PaySim. This demonstrates that the importance of using graph information for prediction on this dense graph dataset. For conclusion of this project, AI is a powerful tool for financial transaction surveillance and analysis. Traditional methods like SG Boost are strong baselines for tasks like money laundering and fraud detection. So this motivates us to design better deep learning methods for these financial applications. For future work, we will continue improving the fin detector and extend it to other tasks, for example, price prediction, loan, e-commerce, etc. We also plan to open source the framework. For other related work, we want to train large foundation models for financial data processing. In an ongoing research collaboration with Beijing Academy of Artificial Intelligence, we already downloaded more than 16K datasets from a popular data science website, Kaggle, to pre-train a large foundational model to perform a wide range of financial tasks, such as price prediction and fraud detection. Also, we are working with a group of researchers from Google DeepMind. We study large AI models that can process multimodal data, such as tables, graphs, images, and text. We want to build a large AI model that can process multimodal financial data. And that's all for my talk. Thanks for listening.
Thank you very much, Dr. Liu. Okay, because time is running short, let me just conclude the whole section. Now, let me first recap with you guys about what we have been talking about. Okay, I think Dr. Alan Au gave us a very good introduction on the architecture design choices, right? And in fact, we have talked about some of the core requirements. And if you are in the area, you should understand that there are no perfect solutions. For example, how to get a balance between the privacy, security, AML, CFT control versus the efficiency issue, in particular for the retail CBDC scenario. And actually, Dr. Ao also point out a very important issue, but I don't think the community pay too much attention on it. In particular, that would be the smart contract vetting and deployment. And in our group, we have been doing on this certification stuff and vetting and verification issue on smart contract. But because of the time limit, we probably cannot talk too much about the details. Then if you look at the another talk, which is related to the privacy versus the AML and CFT by Dr. Liu just talked about, we actually can propose a solution using AI to maintain the privacy of the transactions while we are able to detect some kind of the abnormal transaction clusters. All right, so this is one of the solutions that we provided in the talk. And then on the other hand, I think Dr. Yun also talked about two particular solutions that we tackle the CBDC requirements. For example, the key management. And I think if you are in the community or in the business, you should know that none of the existing exchange has a very good solution to protect the key management for hot wallets. You know, some of them are actually avoid using hot wallets a lot, and then using cold wallet as well. And then on the other hand, Professor Lam also mentioned a very, very important criteria for CBDC of ECNY, which is how to achieve small value anonymity while traceable for large value transactions. I think Dr. Yun gave us a very good idea how we can approach these problems. And finally, Dr. Chin actually talked about the gap between the design and implementation, which is often overlooked by the community. Now, let me just conclude that we only have 1 hour and 10 minutes for each speaker. They are all experts in this area. Our group has a lot more solutions how to tackle this CBDC design and implementations. So if you are interested, I suggest you can approach our team. And if you have meaningful problems or collaborations, we are welcome you to talk to us. Now, before I end my talk, let me just do 2 announcements. Now, in response to the government's report about digital asset, and also if you look at the CBDC, there are still a lot of technical questions that we need a lot of collaboration between academia, industry, and government to resolve it. So I want to tell you that we are going to form a digital asset technical consortium. Now, if you look at it, this should be the first in the Asia Pacific or even in the world. And our vision is to bring together all those elite leaders from academia, industry, and government organizations to provide insights and advisory on, because we are from computer science, we want to focus more on the technical aspect as well as the, how to tackle the user requirement on the design and implementation of the digital asset platforms, products, services, or all the related issues. Now, some of our missions or the tasks that we are going to do include the representations. We want to recruit or, try to ask a few experts to join us to provide advice to the community. And at the same time, we want to foster the collaboration among all the members, no matter they are from academia, industry, or the governments. And we will try to set up a network just like the blockchain or whatever. I think a popular example will be the open source. Okay, we want to do something like the open source community. We want to set up a discussion forum, platform for all the solutions, idea, questions, and our members will try to answer the question for them. And more importantly, I think it comes to the education issue, and we will try to provide public seminars, information for the community. All right, now actually this initiative is from 2 universities in Hong Kong, of course, Hong Kong U and also Poly U. And if you look at the recent survey, you know that both Hong Kong U and Poly U are very good in these areas. And in fact, if you look at the experts in from the community or from the academia in Hong Kong, most of the experts are actually in these 2 universities. And we'll try to invite other Hong Kong parties, GBA, government, organization as the funding members or supporting members for this initiative. And please pay attention to it. More details to come in a few weeks. And on the other hand, I also want to make another announcement is probably also noticed that Hong Kong is very keen to provide moot courses for the general public. And in a few years ago, we start to offer free course professional certificate in FinTech. And actually, we have 3 more FinTech moot courses coming. And the first one will be the focus on the technologies that drive FinTech. And we are going to launch it in December, and more information will be disseminated in November. And of course, digital currency, which is also the focus of the seminar today. And we are going to have the second one on digital currency, the technology challenges and the opportunity to be launched in July next year. And also the e-payment regulation will be launched at the end of next year. Now, before I end our section, I encourage you to look at the Q&A. I think quite a number of, even though we don't have a Q&A section here because of the time limit, but then I think a lot of audience actually put down a lot of good questions. So before we end the talk, end the seminar, and the panel, you are encouraged to look at it, and we actually provide all the answers to the Q&A questions. Now, I think we need to end the section because the next section for the Hong Kong U FinTech Day is coming now. But then if you're really interested in any related issues, collaborations, or whatever related to CBDC or digital currency, you are welcome to contact our team, and we should be able to talk more on that. So thank you very much. And thank you for coming, and then hope you have enjoyable day in this typhoon number 8 evening. Thank you very much, and thank you for all speakers and the organizer. So we'll stop here. Thank you very much.